Vietnam's rise from a war-torn, impoverished nation to one of the world's fastest-growing economies is often hailed as a remarkable development success story. In the single generation since the Doi Moi renovation reforms began in 1986, Vietnam lifted millions out of poverty, modernized its economy, and achieved sustained high growth. Real GDP per capita jumped from under $436 in 1986 to nearly $4,300 by 2023. At the same time, extreme poverty fell dramatically. The World Bank notes that the share of people living on less than $3.65 a day plunged from 34% in 1992 to 1% in 2022. Such progress, combined with consistently strong growth rates, places Vietnam's economic model among the most successful globally. Vietnam's economy accelerated again in 2024, growing 7.09%, well above official targets and world averages. This growth outpaced every large economy in the world for 2024. In fact, Vietnam's GDP growth led the ASEAN 6 region in 2024, 7.09% for Vietnam versus 5.6% for the Philippines, 5.1% for Malaysia, etc. These results were driven by booming exports, strong manufacturing output, and hefty foreign investment inflows. As Reuters reported, exports FDI fueled GDP growth of 7.09% in 2024, up from 5.05% in 2023. Key metrics for 2024 include roughly $405.5 billion in exports and $380.8 billion in imports, yielding a $24.8 billion trade surplus. Foreign direct investment, FDI, inflows also rose to about $25.35 billion, a 9.4% increase, showcasing Vietnam's continued appeal to international investors. Vietnam's success rests on the sweeping market-oriented reforms known as Doi Moi, launched in 1986. Before Doi Moi, Vietnam's economy was centrally planned, largely agrarian, and fragmented by war. The reforms introduced private ownership of land and businesses, deregulated many prices, and opened Vietnam to global markets. Over the next decades, the government cautiously but decisively liberalized trade, restructured state-owned enterprises, and encouraged private and foreign investment. The World Bank credits Doi Moi and favorable global conditions with transforming Vietnam from one of the world's poorest countries to a middle-income economy in a single generation. In practical terms, Doi Moi broke the economic isolation of the 1980s. Trade barriers were lowered, attracting firms to set up factories. By the 1990s, Vietnam had normalized relations with the US and joined ASEAN, 1995, and later the WTO, 2007, each step embedding it deeper in global commerce. This policy pivot meant that for the first time, Vietnam's farmers, workers, and entrepreneurs could tap international markets. The result was a virtuous circle. Exports and foreign capital flowed in, driving factory growth and raising incomes, which in turn supported more consumption and investment. Over time, agriculture's share of GDP declined while industry and services expanded, a classic structural shift. As the economy modernized, millions of Vietnamese left subsistence farming for manufacturing and services, fueling urban growth and boosting productivity. Since Doi Moi, Vietnam has averaged 5 to 7% GDP growth per year for most of the time. Growth was especially rapid in the 1990s and 2000s as reforms took hold. So, for example, by the early 2000s, Vietnam was routinely growing 6 to 7.5% annually, helping it achieve lower middle income status by 2008. The global financial crisis of 2008 to 2009 briefly slowed growth to about 5 to 6%, but Vietnam quickly rebounded. Entering the 2010s, steady expansion continued, underpinned by booming manufacturing and exports. Through the 2010s, Vietnam consistently outgrew many neighbors and even many emerging economies outside Asia. Between 2000 and 2020, Vietnam's GDP grew at the second highest rate in East Asia after China. Even during the COVID-19 pandemic, Vietnam managed to keep its economy growing by about 2.6%, a modest decline, but much better than the steep contractions seen in many countries. By 2022, growth rebounded strongly to around 8%, reflecting a post-pandemic export boom. Inflation and macro stability have generally been well managed. For example, consumer price inflation remained in the mid-single digits, and Vietnam's budget and debt metrics are relatively modest compared to peers. In 2024, with global trade recovering, Vietnam again surged. Government data shows 7.09% growth for the year, one of the fastest in Asia. Notably, the fourth quarter of 2024 alone saw 7.55% growth, making Vietnam the top performer in Southeast Asia that quarter. For context, Vietnam's 2024 GDP is roughly $476 billion, up from $430 billion in 2023. So, what are the key drivers for Vietnam's growth? Well, for one, Vietnam has become a global manufacturing hub. Major international firms, Samsung, LG, Intel, Panasonic, Foxconn, Apple, etc., have built large factories in electronics, semiconductors, garments, furniture, and more. According to McKinsey, manufacturing has been the nucleus of Vietnam's growth, contributing over 20% of GDP. In 2024, manufacturing and processing attracted $20.2 billion, 64.4% of total FDI. The output of Vietnam's manufacturing sector has fueled one of the world's fastest-growing export programs. Vietnam's exported goods include smartphones, electronics, garments, footwear, machinery, and agricultural products. For example, it was reported that in 2024, exports rose 14.3% year-on-year to about $405.5 billion, making Vietnam one of Asia's largest exporters. Electronics and phones alone make up a sizable share. This export-led model links Vietnam firmly into global supply chains. Many companies have relocated parts of their supply chains from China to Vietnam, attracted by competitive labor costs and trade access. Then, there's also infrastructure development. Vietnam has invested heavily in infrastructure to support its export machine. Over recent decades, rural electrification, transportation, and logistics have seen dramatic improvement. For example, virtually the entire population now has access to electricity. Major ports, like Haiphong, Da Nang, Ho Chi Minh City's deepwater ports, have been expanded to handle container ships, and dozens of new industrial parks have been built with roads, water, and power ready. Urban infrastructure, highways, airports, metro lines, is also expanding, linking manufacturing centers across the country. These improvements lower costs for businesses. The World Bank notes that between 1993 and 2020, rural access to clean water rose from 17% to 51%, and transportation links have multiplied. All of this has made it easier for factories to operate efficiently and ship products quickly to world markets. Finally, one must also appreciate the stable macro policy and governance. Throughout its growth, Vietnam has maintained stable macroeconomic management. Inflation has stayed in the single digits, often 3 to 4%. Public debt is manageable, and the currency, dong, has been kept competitive. The State Bank of Vietnam has used flexible interventions to smooth volatility, which helped Vietnam avoid the kind of rapid inflation or debt crises seen in some fast-growing economies. At the same time, Vietnam has strengthened institutions. Even though challenges remain, the government has implemented reforms to ease business regulations and combat corruption in key sectors. For example, Vietnam jumped dozens of places in ease of doing business rankings over the past decade. Transparent customs procedures for exports have been enhanced, and the country has embraced digital government services to streamline licensing. These improvements build investor confidence. Credit ratings agencies generally rate Vietnam positively. This prudent approach means that rapid growth has not been derailed by instability, lending further credibility to Vietnam's model. Vietnam's economic model is widely regarded as a global success because it has delivered transformational results. Decades of high, stable growth, massive poverty reduction, and integration as a key player in world markets. The combination of Doi Moi reforms, export-led industrialization, and a skilled workforce has made Vietnam one of the fastest-growing and most dynamic economies on Earth. Comparative data show Vietnam outpacing regional peers and setting new records for economic advancement. In short, Vietnam's experience demonstrates how thoughtful policy and global integration can lift a country from poverty to prosperity in a generation. Its continued growth and rising living standards suggest that Vietnam's model will remain a rising star in the global economy for years to come. But anyway, do let us know what you think. Thanks for watching.